Good afternoon. This is Chris Brecher with Simpler Trading and the Chart Patterns Mastery Room. What was today about? Today was the opposite of yesterday. It's pretty bizarre. What do I mean by that? Yesterday, the bond market got destroyed. We can put this on an hourly chart. Wow, look at that sell-off. Now, this was attributed that FRC went under and that all the systemic risk in the bonds was in the markets were gone. So the bond market was a flight to quality and it got destroyed. What else got destroyed? Don't ask me why there's a flight to quality, but Bitcoin. So Bitcoin got nailed yesterday. Now, contrast that to what happened today. All of a sudden, the regional banks fell apart tremendously. Look at some of these. Wow. So they got nailed. So what happened? All of a sudden, there's systemic risk again. And guess what? The bonds took back everything they lost yesterday. Bitcoin took back everything almost that it lost. And gold by far took back everything it lost. Now, the thing about this is, yep, the bonds were on their high. And you might say, well, the KRE, which is the regional bank index, came back on the close. Net, I don't know if you call that really coming back. And let me just tell you, it might be a bear flag. And that's one reason the ES and the NASDAQ did not rally on the close. The thing is, no trader wants to be long if this hasn't rectified itself. Now, if this had turned up, sure, you might see a sharp rally in the markets, but you didn't. So what happened? The bonds closed near their high, the Bitcoin near the high, gold near the high, because there was a flight to safe havens. So that's usually where they go if there might be systemic risk. So what we're going to do tomorrow, definitely the Fed. You got to worry about the Fed in there, worry, and about what they're going to say. Now, just keep in mind that if they don't raise rates 0.25%, that it means they're nervous. They're nervous about all these banks, and you'll probably see the markets get hit. So just keep that in mind in there. So if they're nervous because they say FRC wasn't a one-off, look at that. And remember, it's salted. It's suspended. It's going to open on the pink sheets in a couple of days. It'll be under FRCQ. But the point is that I'm going to go to charts, and I'm going to go to a bunch of charts. We're going to go to 16 charts. Uh, 15 charts. And we're going to take 1-minute charts of all of these. Now, there are a number of ways I could do this. I could do it this way. So there's a bunch of chip stocks. So you could do it this way. You can go into 15 FANG. You can do it a number of ways. And if I do it this way, I can just go in and do a different workspace. And you'll see it right here. I know you see the psychedelics. And the reason I'm doing this, of changing it, is we've gone to add the VWAP on an intraday chart. We're seeing that the NASDAQ and the ES, all of these stocks correlate with the VWAP. If one breaks, the others break. This is not an anchored. This isn't some newfangled VWAP. This is just whatever is on Thinkorswim. That's it. So if one breaks, usually the others break. If you see some of the FANG stocks break, usually the others break, and so on. If it breaks the VWAP, this turns red. If it breaks up, it turns green. It's really cool, very visual. I like that. The other thing, these don't include the MACD. On a 1 minute, I don't see the MACD helping, and then the charts are too scrunched together. But I don't want to show you this just like this. I want to now go on the upper right to Thinkorswim. And we're going to go load symbols to cells. And we took a bunch of regional banks and built a watch list. And that's what you want to watch. What did they do on the close? Well, some had a little rally, but I think the perspective of that is a little wrong. Basically, what happened is they didn't bounce much. Now, they did bounce somewhat. As you see, they bounced somewhat. And what's that mean to me? Well, go back to this 2 chart thing I had. And you'll see the ES bounced. Didn't bounce a lot, but it sure did bounce because those bounced. They stopped going down. Let's just put it that way. So when you have the KRE, this is the actual index that includes those 15 stocks. When this stopped going down, didn't crash yet. Basically what happened is the markets didn't close on their low, but boy, when the KRE has that structure, you're not going to see the ES close on its high. Let's just put it that way. All it was that the KRE stabilized, and you might say, well, what's that have to do with the ES? Every day it's different. Yesterday, the ES went down because the bonds were getting smashed. So the ESs started selling off. So today the ZB went up, but the ES went down not because of bonds. They didn't really pay attention today. They paid attention to this. You can take any of these. But when you see that happening, right there with that arrow, with it crashing, that's what affected the ES today. It wasn't the bonds, wasn't gold, it wasn't Apple. It was this, that when these start falling, that's why the markets got hammered. When this stopped going down, the market stopped going down. So the reason for this to go down is still valid. It's just that this didn't crash on the right. Didn't stop trading. And that's where it was right now. So tomorrow, what are we doing? Well, tomorrow's the big bad Fed. So I'm looking at the bond market on a daily chart in this area. This is a big deal. So the bond market is really woefully underperforming the NASDAQ. Usually the bond market and the NASDAQ work together. So if you see the bonds selling off, like they have, and on the right, you see the NASDAQ rallying, that creates a big negative divergence. Big negative divergence. Right now, the NASDAQ's up near this high. Right now, the bonds are nowhere near it. So that doesn't mean markets can't go up. That's a lot of double negatives for you. What it means is there's a negative divergence forming. It's just forming, and it's not going to take a lot for the NASDAQ to get hit if there are other places to put your money. So the big deal tomorrow is going to be, is this going to break up because of some miracle with the Fed? Or, and I'm going to put this on a 1-hour chart, or is this a head and shoulders? I'll put it on a 4-hour. It's even more dramatic. There you go. Or this a head and shoulders top, and this is going to go all the way to here, another 4 points. If this goes all the way where it was in March, late February, early March, then I have to think the NASDAQ is going to go all the way to here. Look how they correlated for a while. Down, down, rally, 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 rally. But now it's detached. You'll see it here. It's up here at that red line. This isn't even close to any kind of line. This is at a new high for the year, while the bond market needs to go to 134. Needs to go to here, so at least you'd have some excuses to be in the NASDAQ, even if there's a negative divergence still present. If this breaks, that's really is tough for the NASDAQ. So keep that in mind. That's what I'm going to be watching tomorrow. Should be exciting with the Fed coming out. Usually the way we play it is we wait till after the Fed. We don't try to be heroes. There's more than enough stuff to do afterwards. Have a great night. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.